Wanted to talk to both of you. JJ, let's start with you if I could, just to understand how much of this you actually think is the retail trading base and how much you think is the professional institutional trading base effectively either riding this wave or trying to take advantage of the retailers.
Well, it's very tough to say which one is which, Andrew. Obviously, they have been very popular with our clients overall. I look at what we saw in AMC, and you and I talked about this about a week and a half ago. And AMC, particularly, it traded significantly more. Particularly, what's interesting to me is the trading really started to pick up on Thursday and Friday, particularly with a buying bias. Tuesday was a little bit lighter, and then yesterday, of course, was just absolutely insane. BlackBerry is another one. BlackBerry yesterday traded 20 times what it traded in mid-May in terms of our stock volume, more than 10 times what it traded in options volume. So there's definitely interest. But again, the interesting thing is with all the stocks that were, in these meme stocks yesterday, the GameStops, AMCs, BlackBerries, they all were really picked up their buying on Thursday and Friday. Actually, Tuesday was a little bit more of a, I'll say flat in terms of not quite as big a buying bias. And then yesterday, all of them had a bit more of a buying bias to them as the volume really surged.
Hey, JJ, real quick before I get to Gunjan, is there any risk that firms like yours or Robinhood or some other brokerage firm is not going to be able to handle the volume, that we're going to see a situation similar to GameStop where effectively the amount of collateral that's required to put up effectively puts some of these stocks into a holding pattern?
Well, the one thing I would say, Andrew, is everybody learned some lessons from January. Our risk teams always do a phenomenal job, but days like yesterday and all through the week do an amazing job of keeping our clients in check, so to speak, making sure that both the client and the firm is protected. So I can't speak for other firms, obviously, but I will say our risk teams were well ahead of this as we saw that surge on Thursday and Friday and started to get out in front of this.
Okay, so JJ, you'll speak for TD. I'm going to go to Gunjan. Speak to the industry. This issue, Gunjan. What's the risk that a Robinhood or some other firm says, you know what, no mas, we can't do this anymore?
Sure. So clearly this meme stock mania has only gotten bigger since January when Robinhood first has had those issues, right? Many people thought that it would actually dissipate and it would be old news by now. But the mania has gotten even bigger and options activity has been through the roof. Stock activity has been through the roof. I'll let JJ speak to the risks for the industry, but it certainly does seem like many brokers did learn their lessons from earlier in the year.
And how much do we think this is a function just of the options trade at this point?
Look, the options activity is a key ingredient here. I've been following this market for a few years, and I've never seen this much interest in options trading. Options activity on AMC hit a record high yesterday. So that's above the levels that we saw earlier in the year when the GameStop frenzy was first starting. And it shows you how this movement has grown. And people are looking to lottery ticket bets on AMC. They're trying to double, triple, and maybe even quadruple their money within days or even hours through these call options tied to the stock jumping even higher. And it's up another, 20% pre-market right now.
JJ, is this ultimately good or bad for the markets, for the economy, for the system? Because I have to imagine when this is all over that regulators are either going to try to regulate this kind of speculation and trading out of the system, or I think to the extent you believe that some of these traders are trying to demonstrate that the whole system is manipulated, that it blows up the system unto itself.
Well, Andrew, I would say this. So first of all, I think the fact that so many people have become interested in the market long term is an absolutely great thing. Now, with that said, it does make me a little bit fearful that people don't fully understand the products they're using. Now, most firms do have some sort of a tiering system to show that you have some experience before you go in and trade. You have proper capitalization, et cetera, particularly on options. I've traded options professionally my entire life. Right. I think they're wonderful tools. But just like any tool, if you don't know how to use it, it can burn. You know, if I don't know how to use fire, things are going to turn out pretty poorly. If I get educated on it, it's an amazing tool. So that's why we do spend so much time on education. I do think that, you know, again, you want to reinforce this isn't gambling. This is about understanding what can happen to your money. I truly hope people are spending the time. We've seen a 300% lift in our education usage, so I do think that most people are doing it. Are there going to be some people who misuse things? There are some people who misuse everything, unfortunately, but I do believe that the average person wants to do the right thing for their own money.
JJ Gunjan, thank you. I do want to say there is an element of gambling in this. This is much more speculative at this point than any kind of investing. Somebody actually put on Twitter, they said every time Andrew Sorkin wrongly says investors in the same breath as AMC, you have to drink. This morning, you'd be drunk by now. I don't think this is investing. It isn't.
Shepard Smith here. Thanks for watching CNBC on YouTube.